Crypto for beginners. What is cryptocurrency? Let's start from the beginning. What is cryptocurrency? Cryptocurrency, or crypto for short, is a form of digital money. But unlike traditional money, it doesn't exist in physical form. You can't touch it or put it in your wallet. And it's not controlled by any government or bank. Instead, cryptocurrencies are built on a revolutionary technology called blockchain. What makes crypto different? Here's what makes cryptocurrency unique. 1. Decentralized. No single person, company, or government controls it. It's run by a network of computers worldwide. 2. Digital only. Crypto lives entirely online. There are no coins or paper bills. 3. Limited supply. Most cryptocurrencies have a cap. For example, there will only ever be 21 million bitcoins. That makes it scarce like gold. 4. Peer-to-peer. You can send money directly to anyone, anywhere, anytime, no middlemen needed. A simple example. Imagine a friend in another country. With a bank, it might take 3 days and a $20 fee. With crypto, you can send digital currency in seconds for pennies and fees, and no bank is needed. A brief history. 2009, Bitcoin was launched by a mysterious creator known as Satoshi Nakamoto. It offered an alternative to traditional banking after the 2008 financial crisis. Since then, thousands of other cryptocurrencies have emerged: Ethereum, Litecoin, and many more, each with unique features and purposes. So why does it matter? Cryptocurrency isn't just another app or tech trend. It's a new way of thinking about money, value, and freedom. For beginners, it might seem complex, but don't worry. Over the next sections, we'll break it all down step by step. This is called blockchain. At its core, a blockchain is like a digital record book. But instead of being stored in one place like a traditional database, this book is shared across thousands of computers all over the world. Every time someone sends or receives cryptocurrency, the transaction is recorded in a block. Each block contains a group of transactions. Once a block is full, it is added to the chain of previous blocks. That's why we call it a blockchain. Here's what makes it special. Once a transaction is added to the blockchain, it cannot be changed or deleted. This creates a permanent, secure history of every single transaction. Let's make it easier to understand. Imagine a spreadsheet that is copied thousands of times across a global network. Every time you update it, the change appears instantly on all versions of the spreadsheet. That's similar to how blockchain works. This technology removes the need for banks or third parties. Instead, the system runs on a network of users who all agree on what's true using a process called consensus. Consensus means that the majority of computers on the network must agree that a transaction is valid before it is confirmed. This prevents fraud and makes the system extremely secure. Blockchain is also transparent. Anyone can view the full transaction history on most blockchains. This openness builds trust because you don't have to rely on a company or government to manage it. In summary, blockchain is the engine that powers cryptocurrencies. It allows them to be fast, secure, and independent of central authorities. In the next section, we will look at the most famous cryptocurrency of all and how it started this entire movement. Say continue when you're ready. What is Bitcoin and why does it matter? Crypto for beginners. What is Bitcoin and why does it matter? Now that you understand blockchain, let us talk about the first and most well-known cryptocurrency in the world. Bitcoin. Bitcoin was created in 2009 by someone using the name Satoshi Nakamoto. No one knows exactly who Satoshi is. It could be a person or a group of people. What we do know is that Bitcoin was designed as a response to the financial crisis of 2008. People were losing trust in banks and governments to manage money. So Bitcoin was created to give people an alternative, a way to control their own money without needing a bank. Bitcoin is often called digital gold. Like gold, it is limited in supply. There will only ever be 21 million Bitcoins in existence. This scarcity is part of what gives Bitcoin its value. Another reason people value Bitcoin is because it is decentralized. That means no company, government, or bank controls it. Transactions are verified by thousands of computers around the world. This makes Bitcoin very secure and resistant to fraud. People use Bitcoin in many ways. Some use it to send money quickly and cheaply across borders. Others see it as a store of value, like an investment that might grow over time. Some businesses even accept Bitcoin as payment for goods and services. Over the years, Bitcoin has grown from an experiment into a global phenomenon. It has inspired thousands of new cryptocurrencies and launched an entire industry of digital finance. In the next section, we will explore some of these other cryptocurrencies and learn how they are different from Bitcoin. What are altcoins and what do they do? How to buy your first cryptocurrency. Now that you understand what cryptocurrency is and what types exist, let us talk about how to actually buy your first coin. This is a big step, and it is important to do it safely and wisely. The most common way to buy crypto is through an exchange. A cryptocurrency exchange is a website or app where you can create an account, deposit your money, and buy different cryptocurrencies just like you would buy stocks online. Some of the most trusted exchanges include Coinbase, Binance, Kraken, and Crypto.com. When choosing an exchange, make sure it is available in your country, has a good reputation, and offers strong security features like two-factor authentication. Here is a simple step-by-step process to buy your first crypto. First, sign up for an exchange account. You will need to provide an email address, a password, and in most cases, some form of identification like a driver's license or passport. This process is called KYC, which stands for Know Your Customer. It is required for safety and legal reasons. Second, deposit funds. Most exchanges let you connect your bank account or debit card. Some also allow credit card payments or even PayPal, but those options may come with higher fees. Third, choose the cryptocurrency you want to buy. As a beginner, many people start with Bitcoin or Ethereum because they are the most established and widely supported. Fourth, decide how much to buy. You do not need to buy a full Bitcoin. You can buy a small fraction of it. Even $10 or $20 worth is enough to get started and begin learning. Finally, review your purchase and confirm the transaction. Once complete, the crypto will appear in your exchange wallet. Remember, exchanges are convenient, but not always the safest place to keep your crypto long-term. In the next section, we will cover the different types of crypto wallets and how to store your coins securely. Understanding crypto wallets and keeping your coins safe. For beginners, understanding crypto wallets and keeping your coins safe. Once you buy cryptocurrency, the next big question is where to store it. This is where crypto wallets come in. A crypto wallet is like a digital version of your physical wallet, but instead of holding cash, it stores the keys that let you access your coins. Your crypto is not stored inside the wallet itself. What the wallet holds is something called a private key. This is a special password that proves you own your crypto. If someone gets your private key, they can take your coins. If you lose it, your coins are gone forever. There are two main types of wallets: hot wallets and cold wallets. Hot wallets are connected to the internet. These include mobile apps, desktop apps, and web-based wallets. They are easy to use and good for beginners, but they can be more vulnerable to hackers. Cold wallets are offline. These include hardware wallets, which look like USB drives, and paper wallets, which are just your keys written down and stored safely. Cold wallets are considered the most secure because they are not exposed to the internet. If you are planning to trade often or just getting started with a small amount, a hot wallet from a trusted exchange or mobile app is fine. But if you are holding a large amount for the long term, a cold wallet is the safest option. Never share your private key or recovery phrase with anyone. Write it down and store it somewhere safe, preferably in more than one secure location. Crypto gives you full control over your money, but that also means full responsibility for keeping it safe. In the next, we will talk about how to read crypto prices and charts so you can make smarter decisions. Reading crypto prices and charts for beginners. Crypto for beginners. Reading crypto prices and charts for beginners. When you look at cryptocurrency prices online, you might see a lot of numbers, charts, and terms that seem confusing at first. But once you understand the basics, reading crypto charts becomes a useful skill. Let us start with price. The price of a cryptocurrency is simply how much people are willing to pay for one unit of it. This price changes every second, based on supply and demand. If more people want to buy a coin, the price goes up. If more people want to sell, the price goes down. Next is market cap. This stands for market capitalization. It is the total value of all coins in circulation. You get it by multiplying the price of the coin by the number of coins that exist. A higher market cap usually means the coin is more established and stable. Now let us talk about charts. Crypto price charts usually show how the price has moved over time. You can select different time frames like 1 hour, 1 day, 1 week, or 1 year. You will often see something called a candlestick chart. Each candlestick shows 4 things for a certain time period: the opening price, the highest price, the lowest price, and the closing price. If the candlestick is green, the price went up. If it is red, the price has gone down. Volume is another useful part of the chart. It tells you how much of that coin was traded during a certain time period. Higher volume can mean stronger interest or movement. Learning to read these charts can help you spot trends, understand what is happening in the market, and avoid emotional decisions. You do not have to be an expert, but knowing the basics gives you more confidence. In the next, we will talk about how to build a simple crypto strategy and avoid common beginner mistakes. Building a crypto strategy and avoiding mistakes. Crypto for beginners. Building a crypto strategy and avoiding mistakes. Now that you understand how crypto works and how to read the market, it is time to think about strategy. Jumping in without a plan is one of the most common mistakes beginners make. The first step is to decide your goal. Are you investing for the long term, trading for short-term profits, or just learning with a small amount? Your goal will shape how you use crypto. If you are a beginner, a long-term strategy is usually the safest. This means buying solid coins like Bitcoin or Ethereum and holding them for months or even years. This approach is often called holding, and it is based on the belief that crypto will grow in value over time. You should also decide how much money you are willing to invest. Never invest more than you can afford to lose. Crypto is still new and very unpredictable. Only use money you do not need for bills, rent, or emergencies. A good crypto for beginners. Understanding the risks and staying safe in crypto. Crypto is exciting, but it also comes with real risks. As a beginner, it is important to understand these risks and learn how to protect yourself before diving deeper. The first big risk is volatility. Cryptocurrency prices can rise or fall dramatically in a short amount of time. It is not unusual for a coin to lose or gain 20% of its value in a single day. This can be stressful, especially if you are not prepared for it. That is why having a long-term mindset and only investing what you can afford to lose is so important. Another major risk is scams. The crypto world has many genuine projects, but it also has bad actors. Be careful of fake websites, phishing emails, and people offering guaranteed profits. If something sounds too good to be true, it usually is. Never give out your private keys or recovery phrases. No legitimate platform will ever ask for them. If someone does, they are trying to steal your crypto. Watch out for pump and dump schemes. This is when a group hypes up a coin on social media to make the price rise, then sells all at once, causing the price to crash and leaving others with losses. Fake giveaways are another scam. You might see social media posts pretending to be from celebrities or companies promising to send back double the crypto you send them. These are always fake. Never send money to these addresses. Also, be careful with new and unknown coins. Some are created just to trick people into investing and then vanish, a scam known as a rug pull. To stay safe, always double-check website addresses. Use trusted exchanges and wallets. Turn on all security features. And never rush into a decision. Take your time to research and think. In the next and final, we will look at where crypto is going and what role you can play in the future of this digital revolution. The future of crypto and your place in it. Crypto for beginners. The future of crypto and your place in it. You have now come a long way on your crypto journey. From understanding what cryptocurrency is to learning how to buy it, store it, and stay safe. But the story of crypto is just beginning. So what does the future hold? Many experts believe that cryptocurrency and blockchain technology will reshape how we use money, how we build trust, and how we connect online. We are already seeing signs of this change. Banks and governments are exploring digital currencies. Major companies are investing in blockchain. New technologies like decentralized finance and NFTs are creating new ways for people to earn, trade, and share value. Crypto is also giving power to people in parts of the world where banks are hard to reach. It lets anyone with a phone and internet access participate in the global economy. That is a powerful idea. At the same time, there are still challenges. Governments are working on rules to protect users. Energy use is being questioned. Technology continues to evolve. This space is growing fast, and no one knows exactly how it will unfold. But one thing is certain. If you keep learning, stay curious, and act responsibly, you can be part of this digital revolution. Whether you become an investor, a developer, or just someone who believes in financial freedom, your journey matters. Crypto is not just about making money. It is about rethinking how we trust, share, and build value in a digital world. You are no longer just a beginner. You are now a part of a global movement that is shaping the future. Thank you for listening, and welcome to the world of crypto.